Welcome back. This is a bonus episode of the Fostering Financial Victories podcast. So we did one of these a couple weeks ago when the market was jumping all around. Today we are joined by Rob Coleman and Chris Arthurs. So the goal of today is to talk through some of the detail on the CARES Act, some of this relief bill that's been passed from the higher ups in Washington to hopefully offset some of the economic turmoil that's going on. So Chris, thanks for joining us. I know you were in a busy time of year.
Yes, sir.
So Chris is a CPA. He's been a CPA for 10 years, owns his own firm here in Greenville, a team of 9. You guys focus primarily with small business owners, kind of shepherding them through the initial startup phase into the entrepreneur side of things and full service firm.
Yes, sir.
So Rob is a wealth coach with our team, the Foster Victor Wealth Advisors. You've been doing this for 9 years. I don't know how that's possible, but you have. Resident expert among everything legal. So Rob has the nickname in our office of the Attorney General because he's always thinking about some really deep details. So that's why you guys are here today. So Rob, take it away. I think there's 2 topics we want to make sure we talk about: individuals and small business owners. So those are the 2 big categories that are going to be affected with these stimulus bills. Let's start with the individuals. So what are some keynotes that people need to be thinking about, need to be aware of? What do they do? I know unemployment's a big discussion right now as people are furloughed. What do you think the first thing we need to talk about?
Well, there's so much, which is great, and it's great that we have Chris here to really dive in deep on some of the stuff. But for individuals, there's a handful of things that are in the CARES Act, that are in the stimulus bill that they can take advantage of. So I thought we'd just kind of go down kind of a list of some high points. The first is student loans. A lot of our young clients have student loans, and if they're federal student loans, during this time period from really March through September, they have a 0% interest rate. And this benefits all types of federal student loan borrowers, not just the ones that are chasing public service loan forgiveness, but the ones that are not eligible. So it really benefits both. For the ones that are chasing public service loan forgiveness, they're trying to pay 120 payments and they're trying to get whatever's left on their student loans forgiven. Well, during this time, they go into administrative forbearance, and during these next 6-7 months where they should have been making a payment and they're making no payments, those count as if they made payments. So for some of our clients, they're spending $3,000-$4,000 a month on student loans because they're out of training and their income's really high, and they're paying a lot. So this is like a $20,000 immediate relief to them because they don't have to make those payments, and it still counts towards public service loan forgiveness.
Do they have to file for this deferment or forbearance at all?
I just saw a letter from a client a couple days ago from their federal student loans, and they're already automatically placed in administrative forbearance. I would recommend just double checking, but if they set up with an auto payment, but right now they're automatically getting put in administrative forbearance. They can still pay on top of it, but if you're doing public service loan forgiveness, you wouldn't want to pay because that's just going to be more that's forgiven at the end. For the clients that are not doing public service loan forgiveness, this is interest or 0% interest rate. So any elective payment that they make right now is going straight to principal. So if they're not affected from a cash flow perspective with everything that's going on, this is a great time for them to get ahead.
And now these are just federal loans, right?
Correct.
So this is not somebody that maybe they refinanced it into a private setting?
Correct. If they have private loans, they just need to talk to their lender and see what do they have options. Can they go to interest only? Can they defer payments? But this is just the federal loans.
Okay, so that's the student loan side of this, which I know is a big topic because it was brought out from the Trump administration almost immediately as a moratorium on interest. Tell me about the other end of the scale. So the person who's in retirement, I know there's some alterations to the RMD rules. Tell me about that.
So the RMD, required minimum distributions. So once they turn now 72, they're forced to take required minimum distributions out of qualified plans, IRAs, 401ks, and they now don't have to take them in 2020, which is a great benefit. So they can delay taking them for 2020, and it really helps the people that procrastinated and didn't take their one last year. If they turned 70 and a half in 2019 and they were waiting to take that RMD in 2020, and they would have had to have taken last year's this year and this year's this year, they don't have to take either.
And it doesn't compound for 2021, right?
It does not.
It just basically goes away.
It does not. And if it's an inherited IRA, so if it wasn't their IRA and they inherit it from a non-spouse, they don't have to take the RMD for that either.
Got it.
If they've already taken that RMD this year in 2020, if it's their own IRA, they can actually, potentially, there's two ways to do this, but they can actually put the RMD back in. If they've taken it out within 60 days, and we're only in April, so more than likely they took it out in the last 60 days. If they've already taken their RMD, they can put it back under the 60-day rollover window. If they took it prior to that 60 days and they've been affected, and there's a very liberal definition of who's been affected by the virus, they'd be eligible to put it back in as well.
Okay.
So those are definitely big benefits for the clients that don't need to take their RMD.
Okay. So I know, Chris, I'm sure in your world, you've got clients who are kind of bouncing around this RMD. What do you do? When do you take it? That's a pretty big deal from a tax play, isn't it?
It is, because there's a lot of strategic, not manipulation, but you can target your tax rate based off of your RMDs. A lot of times that's the one thing that you can't manipulate, because it has a required amount that has to be distributed. So a lot of times that's your floor when you're trying to do tax planning. But by removing that, it allows you to kind of play between the tax rates however you need to for the year. And it's definitely a relief, because with the markets going the way that they are, you don't necessarily want to harvest some of these losses and be forced to take them if you're going to ride the long train with it. Yeah. But as far as the planning goes, definitely you're able to kind of get some of the lower tax rates that you wouldn't have gotten otherwise, and take some of those money that you would have gone to taxes and keep it in the market.
Got it. All right. So last individual impact question is going to be, there's a lot of people who are furloughed right now who maybe their business has closed down. What does the unemployment scene look like? I know there's been a lot of discussion state by state on some of the changes. So can you talk through that a little bit?
Yeah, I think it is changing daily, and I know that you just were telling us before we started recording about what's going on with South Carolina, and how that's changing, how they're still trying to figure a lot of that out. So what was the recent news that you just found out as of yesterday?
A lot of this is, of course, reading on forums and different people who used to work there and whatever else. So if you're looking for a source of information, the South Carolina Department of Employment and Workforce's website is usually the place to go. Outside of that, the governor's office, sometimes they'll issue certain things. So, for example, when this whole virus came out, one of the things that the governor did was he issued a decree. But they have their own little basic addresses that they're able to enact certain issues or certain pronouncements. And the governor was able to step in there and say, usually there's a 1-week waiting period that we're going to go ahead and remove. So that was a governor specific, not Trump specific. So, so we've got certain things that'll come from the governor's office that won't come from the government. Or from the federal government,
from the state side of things. So with people who are now eligible that weren't previously eligible to file for unemployment, I know it reaches out to the self-employed, the 1099 contract worker.
Yes.
What do they have to do in order to file this?
So it's a little unusual for them, because that's a federal program and not a state program. So to date, the state hasn't had to deal with self-employed individuals. The way that the unemployment system usually works is, if you're an employer, you pay into it and you basically build up a bank account for it. And so you pay in there based off of a rate, based off of the number of employees you have. You're paying in a certain amount, and each time that you pay in, you increase your balance. Then when someone goes to apply for unemployment, then they will use that money, and then if they dip beyond it, that's fine, because it's not an isolated pool; it's a general pool. But basically, you're paying in against what you've already paid into the system to the unemployment recipient. Okay. So at that point, then they increase your rate going forward, so that you replenish it and build a bigger pool. So that if you have more people apply against it, that you're basically using your own money to fund the unemployment for your employees. Right? And that's why when you hear of people that are claiming unemployment, they're worried. The employers are worried about their rate spiking, because now they have to pay in overall for everyone instead of just for that one employee, right? So that's typically how that works for employees. Absent of an employer relationship, there was no one paying into it. Sure. Right. So now they're going to get an extra $600 a week based off of a federal government initiative, and not a local initiative, not a state initiative. So now at this point, the funding is coming from the federal government. So the state is having to react on how to fill out these forms and how to include people in the process, whereas otherwise they hadn't had to handle that.
And they would have never been eligible because there wasn't money going into that pool, right?
Correct.
Okay.
That is correct.
So from a business owner's perspective, I know there's been a lot of talk about some of the plans inside the CARES Act to help offset some of this unemployment surge.
Yes.
How do we dive into this? Let's peel back the layers.
Yes, of course. All right. So Friday, 2 weeks ago, they announced the CARES Act, which is this big, probably the biggest regulation or the biggest bill, stimulus package, call it what you will, in our lifetime. $2 trillion package that they're basically trying to infuse money into the economy to keep it from crashing. So the way that they did that for the small business front is a forgivable loan program. So there's two different loans that apply. There's a economic impact disaster loan, the EIDL, and that was already in place by the SBA, Small Business Administration, and they have already administered these based off of need. And if you were impacted by something, or if you've got a fire or something where your house goes up or something, and you need a loan, or usually it's on the business side. But if you need a loan, you apply to this program, and you're more likely to get it than a traditional lender because it might be higher risk, or you might not have the credit history or whatever. So you typically apply into this SBA for this specific loan. So now they've expanded the program to where more people are eligible, and they've removed some of the requirements to be able to get in there. And one of the main one was a personal guarantee. And the way they've put it on there is if you borrow less than $200,000, they've removed that. But anyways, it's a true loan program. And so with that, they had a grant piece of it that they wanted to expedite funds to individuals of $10,000. Well, that's changed about 3 times since the time the CARES Act was given. It used to be just $10,000, anyone that applies. It's forgivable. In other words, you don't have to pay it back regardless if you actually get approved for the EIDL, the actual loan. So we hear all kinds of, we hear the full spectrum because we got a lot of diverse clients. And then, of course, the different people that we interact with that are outside of our firm. A lot of people were saying, this is free money from the government, you're foolish if you're not applying for this. And of course, on the actual application, it's a true loan, and you're making all these representations of you're using it because of disaster, and it's based off of need and all these other things that kind of are important that you make sure that you actually need them. But so all these people were jumping in on it.
Could come out to bite you.
Yeah, and so what ended up happening is instead of everyone getting a free $10,000, which is basically what they thought, it's ended up being per the number of employees that you have up to 10. $1,000 per employee. Okay. So it's greatly changed from the way it was originally intended. Right. As far as the administration of it goes. Okay. So that's a true loan. It's got a 3.75% interest rate for small businesses, 2.75 if you're a nonprofit. And it's got a long repayment period, up to 30 years, but it's based off of specific need in your situation. So it's a true loan. Concurrent with that, they also introduced a program called the Paycheck Protection Program, which is the one that everyone's talking about, right? So if you're a small business owner, there's this program out there that is designed to re-inject cash into your business to keep you from throwing all of your employees on unemployment, right? Because if you throw everyone on unemployment, there's no work being done, the economy kind of slows down and screeches to a halt. So the way they try to combat this is to throw money into the small business owner's pocket to keep them employing their people, so that they re-inject the money into the economy. Okay, so the original way it was intended was we're going to take basically 8 weeks worth of pay and give it to them, to the business owner, so that they can use that money to pay their employees. That's how it was originally intended. Okay, and this was again 2 Fridays ago, and since then it's changed several different ways, but it's essentially turned into a run on the banks right now because there's only $350 billion worth of actual stimulus package out there specific to this program, and everyone's acting like it's going to run out. And it might run out because Mitch McConnell submitted to Congress an additional request for an additional $250 billion of the program because of so much demand, which we know that means they're worried about it running out, right? Sure. So what's happening is we are getting inundated with all of our clients, well, not all of our clients, but a fair amount of our clients that are saying, hey, I've heard that this thing's it's first come, first serve. What do I do? It's going to get dried up. Like, whatever you have to do, make sure that I have all my information so I can get at the front of the line, right? Well, that's everyone. So, you know, if you're familiar with history and how run-on banks worked, was basically they say there's limited supply and everyone needs to go ahead and get it, and so that's what's happened.
So the Paycheck Protection Program is different than the disaster loan program.
Completely different, that is correct.
In order for the business to qualify to use the Paycheck Protection Program, I've heard it put a number of different ways. Hey, you got to go out and rehire your employees that you just laid off to qualify. Is that right?
So the way you qualify if you had employees as of a certain date,
Okay.
and if your business was in existence as of a certain date. So
Okay.
February 14th is the magical date, right? So as long as you've had your business in place by then, or up and running, and if you had employees for last year, then you're fine, because they based it off of 12 months. But the way that the forms themselves have been written is that it's based off of, more likely than not, 2019. The law itself says the last 12 months, but the interpretation on the form says more likely than not 2019. So if you know what you're doing, you actually fill it out based off of either one.
Okay.
Right? But because the form says 2019, so you met all the requirements by actually doing that. Or 12 months, which is up to the point that you apply, which is April 1st through March 31st.
Right. Now, and this one is forgivable if you have the documentation on overhead and labor
correct.
and that, right?
So they've put some parameters around that as to how that works. So the amount that you can get is 250% of your average payroll for that 12-month period of time, right? Again,
Okay.
either last year or the last 12 months. The act itself says 12 months, so you're supposed to use the last 12 months. Okay, so that's the top line amount that they'll lend you. Okay, 250% of your average monthly pay. Now, the repayment, the forgiveness piece of it is based off of whether or not you maintain your certain FTEs, a full-time equivalent number of employees from when you started to when you end. So June 30th is the magical date that you have to rehire everyone by, as people were telling you, right?
Yeah.
So full-time employees, and then also making sure that you don't have more than a 25% decrease in pay for anyone making under $100,000. So as long as you restore their pay and you restore the number of full-time equivalents, it's forgiven. But the forgiveness is based off of the actual amount expended over 8 weeks. So you can't just take the money, sit on it for 7 weeks, hire everyone at the end, and magically get it all forgiven. It's based off of what you're actually spending over that period of time.
Okay.
And so the way it works is if you want the full forgiveness, more likely than not, assuming no changes in levels of employment, it's going to take all those expenses to be able to get the full thing forgiven. So whatever's not forgiven converts into a loan at a 1% interest rate. So it's still not bad.
Wow.
The goal, of course, would be to spend it all on the select categories that you have to.
Yeah.
And the categories are payroll, and they've modified that since the act itself to where they now they say that it has to be at least 75% of the forgiveness costs have to be through payroll. But payroll and then rent, mortgage interest, and utilities. Those are the four main
Essentially
things.
overhead.
That's right.
Yeah, just to keep the
Just
rent
to keep them
paid
in
and
there.
keep the business
That's right.
open.
Yeah.
All right, so for the self-employed individual who is running their own shop,
Yes.
and they're a solo employee, can they also file for this?
They can, but they're still kind of changing they're moving the fence post, or the goalpost, if you will, as they go. So the way that the act itself was written says that if you're self-employed, if you have no employees, essentially is the way we've interpreted it. But if you have no employees, and it's just you, it's based off of the net receipts from self-employment. And so some people are interpreting that to be your profit. Some people are interpreting that to be the amount that you're paid, because there's a loose definition on it. There's commissions. There is, I got a whole list right here. It's based off of wage, commissions, income, net earnings from self-employment, or similar compensation that isn't an amount that not more than $100,000 in 1 year prorated for the covered period. So the $100,000 applies for both business owners and self-employed.
But that's way better than unemployment, right?
That depends.
Well, if you're self-employed and you can do
What
this
if you had
on
low
unemployment?
profit last year? What if you were building your business? What if you made $20,000 in profit, but you've invested a lot in advertising, in a workforce, in that situation you wouldn't have a workforce, but in equipment or whatever
Technology,
else.
those type
So
of
you
things.
might have otherwise made $100 and something grand last year, but you paid $100,000 for equipment. So now your profit's
zero.
nice and low. Well, the 250% of that nice and low number might not be as good as unemployment.
sense.
But of course, if you're self-employed, you typically want to drive the success of your business down the road, even if it means losing a little bit of money here and there.
Okay.
Looking at the payroll protection program, backing up not for self-employed individuals, but these small businesses, knowing it's the expenses that they have on payroll, rent, utilities over that 8-week period. it is from the date they receive it, correct?
So it says from an 8-week period from when the loan is administered.
Okay.
So there's some interpretive issues with the bill itself. So typically anytime a bill is issued from Congress, you look at the definitions first to interpret how they're going to interpret the actual text of the law.
Mm-hmm.
And there's certain big things that you would assume would be in there, like retirement. How is that defined? And then they've been pretty good about explaining how health insurance works. But there's certain employee benefits that are included in payroll costs that they're not defined. So it's at this point it is yet to be interpreted. So you'll have multiple interpretations of how to compute the total payroll amount based off of those definitions, which aren't clearly defined.
So whenever the loan is administered is defined, whatever that date is, and we have 8 weeks.
Yeah.
If a business is running payroll twice a month, so the 15th and 30th, and we really look at an 8-week period, there's a good chance that the fourth payroll cycle
Will
could
not be included.
fall outside of the 8-week period.
That is correct.
So what can those businesses do to make sure that they're getting those expenses and they're getting as much as they can forgiven during that 8-week period?
That's a wonderful question. And as far as the actual CPA level advice, I don't know that I can give you a definitive, you should accelerate your payroll or you should, something like that. Because it's very case specific. And it has to, everything that you do tax-wise has to have a business purpose.
Yeah.
Okay.
So how you run your business during these trying times needs to be based off of pure business decisions. Now, if you are worried about your clients, your employees, and you're worried about them not having enough money and they need to go ahead and have extra money for their thing, you might be able to give them an advance for a business purpose if you needed to. Because you know that they're about to go out there and have a bunch of extra expenses. That if you can justify a business motive for that, that might be up to you as a business owner. But it needs to have a clear business motive as to however you operate this. You shouldn't be tailoring everything just to maximize a loan forgiveness from government outside of having a clear business motive.
Okay, so shifting gears a little bit, but kind of staying in the same vein.
Okay.
Let's talk through some of the tax deduction or tax deferral pieces that got thrown into this from the employer standpoint.
Okay. So if you don't mind, I'm going to add one or two more
go
things
right
on there.
ahead.
So the thing with the small business piece of it that's unique to this specific piece is they haven't excluded people who own their own business and on their own payroll. So a lot of times when you have an S corp, when your tax is an S corp, you have an employee officer. So the person who owns the thing actually runs the thing. So at that point, he's getting a salary from his own business.
Yep.
They have not specifically prohibited his payments on there. So he's actually included in the forgiveness piece of it. The payroll paid to the employee owner still is considered part of those costs.
So like even like a realtor who's filing as an S corp,
That's right.
this is absolutely applicable.
This is absolutely
Yeah.
applicable to them.
Okay.
And so they would fall under, if you're an S corp, and even if it's just you're falling under the self-employed piece, not the independent contractor piece.
Right.
Because an independent contractor has no employees.
Yeah.
Right. And so that's how again, it's very loosely determined on there. I mean, they literally said sole proprietors and small businesses with less than 500 employees were both eligible as of last Friday to start applying to this program. And then the second round was independent contractors and self-employeds. The problem is sole proprietors a lot of times is interpreted to be a self-employed individual. So the way we've interpreted, and of course, consult your tax advisor as to how you actually interpret it. But the way we've interpreted it was Friday's round was for those with employees, and this coming Friday is for the round of people without employees.
They made it really easy to understand, right?
A lot easier.
Yeah.
Well, not only that, the banks have yet to figure out how to fill out the forms, the application forms. So it's been interesting trying to adapt to the individual bank's interpretation of a law. So it's interesting.
Wow. Okay. So payroll taxes.
Okay. So with payroll taxes, there is a deferral if you want it. The problem is it's been touted as this amazing thing, but it's limited in its benefit. So what you would think would be all of your payroll taxes, you can just stop paying those and let them accrue and then pay them at some future date to give you enough cash to operate. It's been reduced to only the employer side of Social Security.
Okay.
So it's really, instead of the 15.3% that you're used to paying as an employer, between the employer and the employee side, it's 6.2%.
Okay.
Okay, and then there's some RRTA stuff, which is the railroad stuff. Railroads got their own little section of the tax code. They're For some reason, back in the day, they had a good lobby, I guess. I don't know. But anyway, so RRTA, which is a program into Social Security for railroad employees, and Social Security for the employer side. So you are able to defer that, but the problem is if you do that, you can't also use the PPP program.
So it excludes.
It would kick you out of the ability to use that. And a lot of times, when you have free money, a loan forgiveness, that more likely than not will be a better use of the stimulus package than to kick the can down the road on your payroll tax. But that being said, you might be in a situation where you've laid everyone off and you have this one April payment from March's payroll that you may not have the cash to pay, and it might give you some relief in that regard. Okay. But yes, you can defer that, and the rules on that, you can defer it for the entire year, basically from March. From March, there's a certain date that it starts, but you're able to defer it from March to December, and then it kicks back up like normal in January of next year, but you don't have to pay what you've deferred until December of the following year, so 21 and 22.
So you can defer it for really 2 years.
So basically, you're not paying on it for 9 months, and then you have a full year to wait.
Wow.
And then that's 50% of the amount that you've accrued is due then, and then a full year after that, the other 50% is due. Okay. But if you're bad with cash flow, that could really come back to bite you.
Yeah.
But if you need the relief right now, it could be beneficial.
So really, I mean, this is like a big puzzle that trying to figure
out
which one's the best route to go.
Which client works best in which scenario.
So there's really no blanket recommendation you can make.
And so the issue is there's a lot of industries that have had to shut down.
Yeah.
And so if they're not able to pay their employees, a lot of times it doesn't make sense to go on the PPP program because they're not going to actually expend the money on payroll costs, 75% of the repayment amount, over that 8-week period because they can't rehire them. So in that regard, a lot of times there's free money that most of the other a lot of the other businesses are getting that they're not able to get. So it's definitely it's case specific. What we've found personally is a lot of our clients who are individual owners, like of an S corp, a lot of times a PPP makes sense for them because they're going to pay themselves pretty much regardless because they need to eat, and so they're getting the forgiveness on their own pay. So it's helpful.
Got it. So I know you don't have a good grasp on the timeline of this because it's still in motion, but is there any sort of guideline that says with the PPP plan, how long is the turnaround from the time the applications go in till when this stuff kicks into gear? Any ideas?
Wonderful question. So the issue with the PPP is that the government realized that they didn't have enough resources to administer it all from the SBA, right? Because the SBA is centralized and there's a few people there comparative to the whole country. So what they did is they opened up the program to any SBA lender, and then they even opened up beyond that to people, the specific requirements to how to apply to be an SBA approved for the specific program. So basically all the individual lenders are administering the PPP program instead of the SBA. And so the problems with that is there's no uniform way that they're handling it. So of the banks that we're working with, and typically it's a client, and then when they submit to the bank, there's a handful of variations that the banks are imposing. And then not only that, when they submit them, they're funding it from their own reserves. And the question is, when are they going to fund it? So we've heard on the forums that we're on, the first round of people that had applied last Friday are just now getting the checks today and last night. Into their, and it's not a check, it's the direct deposit into an account that has been specified by the loan itself.
Okay. All right. Kind of switch back a little bit on the individual side. So I know there's been some changes on the retirement account access in terms of what you can pull money out of retirement accounts if you need it. I know some of the loan provisions have changed. Talk through that a little bit.
So I think these are great benefits for the people that need it, but they should not be utilized by the people that don't necessarily need it just because they can access the money. So what's changed is with IRAs, qualified plans, if you're under the age of 59 and a half prior, you couldn't take the dollars out without this 10% penalty. Now you can take the dollars out, avoid that 10% penalty, and you can actually delay realizing the taxes over the next 3 years. You could accelerate and you could pay the tax on the full withdrawal this year, but it's going to default to a third over the next 3 years. You're also going to be able to repay that withdrawal over the next 3 years. And if you do that, you're going to need to work with someone like Chris to refile your taxes if they don't come out with something and make it right by a credit, because it could cost you more just dealing with the odds and ends to make that work. But ultimately, they can take a withdrawal, avoid the 10% penalty, and not realize the taxes other than over the next 3 years, and they can repay it over the next 3 years. So it's great that you're able to get it, but the markets are down right now. And this is the one time that if you don't need the money, I wouldn't take it out, because this is the time you want it in there, for a potential recovery. So this is really realizing your losses if you don't need it and you're just taking it out.
So if you have somebody who's looking for liquidity purposes and trying to find out where do I go for cash, because I know that I've got 6 weeks that I'm not going to have income. If that's an option, what are some other things that they could be thinking about that might be more beneficial in this same scenario?
So I think a lot of individuals and businesses, if they have any type of debt payments, working with their lenders, a lot of lenders are just being flexible in general. They're saying, hey, we can switch you to interest only. You don't have to make principal payments right now. Or we will delay any just payment. Interest will accrue during this time, but we'll delay payments for 90 days. And so it's really just talking with whether you're an individual or a business owner to your lenders and seeing what flexibility do you have and what makes the most sense.
Okay.
I think some of the benefits with the IRAs is great, but it's a case-by-case basis. Is that really the best place to get money? There's a lot of stuff in here that's a benefit, but it's not as great of a benefit if you really dive deep. One thing that Chris and I were talking about is there's an extra charitable deduction above the line where you can get $300, where if you really look at what that net benefit is to individual taxpayers, ends up being $100.
It's whatever your tax rate is times $300. So
Yeah.
between federal and state, if you're in a 22% rate for the federal and a 7% for South Carolina, you're at 29%. So it's $90 worth of taxes essentially that you're saving on $300. But the reality in that specific one is a lot of people, based off of the tax changes on the last tax plan in the TCJA, Tax Cuts and Jobs Act, changed the whole scope of how people were taking individual deductions to where they increased the limit for your standard deductions. So a lot of people weren't itemizing anymore, and the charitable deductions go under itemizing. So all they did was they brought some of that, it made it so that everyone gets a benefit of it instead of only the people who meet the itemization thresholds. So it's an immediate benefit for people that are already giving to charity. It just gives them a little extra in their pocket if they weren't going to itemize.
Okay.
But one thing you mentioned is I was talking about just the withdrawals from qualified accounts. If you're an active employee and you have a 401k, from a loan provision standpoint, that changed as well. You now can access up to $100,000, where previously it was $50,000. So that went up to $100,000 that you could withdraw, and you can now withdraw 100% of your vested balance. Previously, you couldn't access 100%.
Okay.
You can also delay payments on that loan for up to a year, and then you'll have a 5-year repayment. So really, it moved from a 5-year repayment to a 6-year repayment, and over the next 12 months, you don't have to pay on it. So those are great benefits if you need capital. However, this is the time that you want to leave those dollars in the account, in my opinion, if you don't need it.
So it seems like they're opening up the access points a little bit just to give people some flexibility. If the markets weren't down, it might be really good, right?
Yeah.
Which we might not be in the same situation. So Chris, with what you're tasked with, it seems like you're going to be in a pretty high demand here.
I would say my phone's ringing off the hook.
I would think so.
So thankfully we've got the staff that's handling a lot of the filtering their requests and disseminating them throughout our office staff. But yeah, we got a fairly defined process of how we best communicate, and a lot of people have just been circumventing that, just going texting me, calling me, leaving me voicemails. But we've been able to, as much as possible, shift focus, because the main thing that I don't know that we've mentioned this before is in this series is they moved the due dates for the tax returns from April 15th to July 15th, and so that's for both the tax return filing as well as the payments that are due.
Okay.
So that's actually alleviated a lot of the pressure that would have been everyone needs to file by April 15th. So they've kind of relieved a little bit of pressure off of us. We still have people, if they're going to end up owing, we want to get them done as soon as possible so they can know how much they owe. And if they're going to get a refund, we want to get that filed so they can have cash in their account. But with the movement of the dates, it did give us a little bit of a breathing room. So now we're dealing with all the different banks trying to administer the PPP program. Yeah. And so with that, the banks are still coming online to administer this program. So there's a lot of them, like Wells Fargo should be back online today, maybe tomorrow. They just announced that they're now able to get back into it because Congress gave them a little bit more leeway on their administrating of it. But right now, the PPP program, the banks themselves are only lending or doing these SBA loans to their existing client base. So if you have a bank account somewhere that's not administering this loan, you're kind of left high and dry. So there's certain ones online that you can go to that are advertising that they take it for non-account holders, and you can register for their system and get in a queue. Because at that point, they then tell you like, hey, you're in line, and as soon as it opens up, we'll give you the rest of the steps to put it in place.
Okay.
But the issue is there's a big bottleneck right now between the banks as far as which ones are administering the program and how they're submitting it to the SBA. So a lot of times, prior to yesterday, a lot of them were sitting on applications. So you send them an application, they'd sit on it and try and figure out how to get it into their framework, into the SBA mainframe system that they actually load everything into. And then they would push them through like yesterday and today. So there's a giant bottleneck at the banks right now as far as administering that program. And so we're dealing with the demand from banks finally telling people where it's at, us already having done the work on the back end for our clients, getting them the information that they need. And then coordinating all of that into one tiny little bottleneck to get as many people as possible that are eligible for it, that would benefit from it, onto this plan.
So just so that people can have proper expectations, what is the amount of legwork that needs to be done from the business owner's point of view in order to go from start to basically a successful application?
So a lot of it's based off of specific reports for payroll. So the payroll ones are going to be based off of your filed quarterly tax forms that you've already submitted to the government. So what we've been doing for our packets that we know the banks are requesting, we've taken all the 941s, which is the quarterly payments, the 940, which is the annual filing for federal unemployment, packaging all that together, payroll reports for last year, for first quarter. We've even been putting together the South Carolina Secretary of State proof of business on there. It just shows kind of like where they are and whether it's active or not as of a certain date. And then we've been packaging all that together with the loan application itself as far as the calculation for how much payroll they can do. And then of course we're informing our clients that they're of course responsible to review everything, make sure it all goes in there nice and so that they at least understand what they're doing. And we're really good about educating them and telling them what the program is and then what the benefits are and then whether or not they might want to consider it. And it's completely on them if they think it's going to benefit their business. But we've been putting all that together for them in a nice neat little bow so that they can just give it to their bank if they feel like that it's a good program for them.
Got it.
But yeah, so anyone that's trying to do it themselves, you've got to get the 941s, the 940 payroll reports for last year, payroll reports for this year, and the loan calculation, and then the application itself.
Okay. All right. Anything else you think we need to hit on? We
There's
went through a lot.
Yeah.
Hopefully people didn't get glazed
Try not to,
riding down the road here.
Yeah.
I think there's so much in this, and there's even a lot that we didn't cover. But the biggest thing is it's a case-by-case basis,
Yeah.
not just for the individuals, but also the businesses.
Okay.
What dollars or resources are out there that you should take advantage of? What are you not going to be eligible for? Which kind of prohibits you from double dipping is really just taking a step back, looking at it, and there are some benefits out there, but they're really not as impactful as they look. So, which avenues should you really be going after? And so sitting down with either your financial advisor or someone like Chris, who in a very short amount of time has become an expert on these PPP loans, would be very impactful just to see, am I making the right decision and do I have everything I need to move forward?
Okay.
And for us, it's really the conditions of this crisis, if you will, this quarantine, has really stressed the need for a financial advisor for a business, not a coach, but somebody who's in your corner that's looking out for you. So we've been able to kind of highlight how we've been able to work with our clients and look out for them. So a lot of the conversations that we're having is, hey, we did all this work on the back end, knowing full well that you'd be a good recipient for this. Let's talk through what that means. So I've had several phone calls with people that I've said, hey, you should take a look at this PPP program. We've done the math for you. You're going to get $300,000 tax-free if you do this, and if you adhere to it, and if it makes sense for your business. And they're like, whoa, didn't even know this thing was going on.
Yeah.
Thanks so much for looking out for us. But having somebody in your corner that's looking out for you is very important. And we're finding more and more that when things go wrong, that's the time you need them. So we've really been able to highlight what we do for our clients during this time period.
Well, Chris, we appreciate you taking time out of your busy day. I noticed that you didn't even bring your phone on here, so it didn't vibrate off the table. But take a minute, tell everybody how they can find you, reach out to you if they want to get more information or ask you just specific questions about their situation.
Of course. So as you can imagine, there's a flood of information. So we are taking care of all of our clients right now, making sure that they're all taken care of. But we are definitely talking to new people who are realizing that they need somebody like us in this situation. And as much as I can, from our different relationships, especially the Foster Victor relationship that we've had, we are reaching out to clients that have questions of theirs and of the general public, and giving them advice and just giving them an overview of how this stuff works. So if you call our main line, or and we'll put some material out there on how to get to us, but if you call our main line or if you email me, it'll go through our system and we'll get it disseminated to where it needs to go.
You want to give everybody that number?
Yeah, sure. 864-280-9946. That's our main office line. And then, or you can email me at chris@arthursandcompanycpa.com, all spelled out.
Got it. So we will list the contact info for Chris and his team in the episode notes on the podcast platform that you're listening to this on. We'll also have links to some of the detail that we talked about today, so that if you want to go in and read through it and try to figure out what in the world is going on, what route to go. I think that'll be really helpful. If you have any questions, you can reach us. You can find us on the web. Our website address is fostervictorwa.com. If you have questions, suggestions, if you want to reach out and talk to Rob or any other of our wealth coaches to help on a more personal planning standpoint, we can do that there. You can follow us on Instagram at Foster Victor Wealth Advisors. Thanks for spending some time with us, guys. I know y'all got a busy day. We appreciate it. If you found this to be helpful, please forward it to somebody who you think might find this to be relevant in their current situation. So we appreciate it. Until next time.
All right.
Sounds good.
Information contained in this podcast was intended for general use, not to be used as specific advice. For content tailored to your personal situation, please contact one of our wealth coaches.